I started investing with just $100, and I'm going to show you exactly how you can do the same thing today. Welcome to Wealth Coded, and this is how to start investing with $100 step by step. You don't need thousands of dollars or a finance degree to start building wealth. I'm breaking down everything from opening your first brokerage account to automating your investments so you never have to think about it again. Let's get into it. So here's the deal. Before you put a single dollar into the market, you need to understand one thing. Investing is a long game. I'm talking years, even decades. The biggest mistake I see people make is trying to time the market, waiting for the perfect moment to buy. But the thing is, time in the market beats timing the market every single time. When you invest $100 today and leave it alone for 30 years at an average 10% return, that becomes around $1,745. The mindset shift you need to make right now is this: you're not trying to get rich quick, you're building a habit that will compound over time. Starting small is actually better because it removes the fear and pressure. You're learning the system with money you can afford to invest, and that's exactly how I started. Once you see your first $100 grow, you'll gain the confidence to keep going. I'm going to walk you through opening a brokerage account step by step, because this is where most people get stuck. First, you need to compare brokers. I recommend Fidelity, Charles Schwab, or Vanguard, because they have zero commission fees and they're trusted institutions. Go to their website or download the app, then click Open an Account. You'll need your social security number, driver's license or ID, and your bank account information to link for transfers. The whole process takes maybe 10 to 15 minutes, and you can do it from your phone. What I like about these brokers is they all offer fractional shares, which means you can buy a piece of an expensive stock or fund even if you only have $100. They're also SIPC insured, so your investments are protected up to $500,000 if the brokerage fails. Now comes the fun part, actually buying your first investment. I recommend starting with an index fund like VOO, which tracks the S&P 500. That means when you buy VOO, you're buying a tiny piece of 500 of the largest companies in America: Apple, Microsoft, Amazon, all in one fund. The expense ratio is only 0.03%, which means you pay $3 per year for every $10,000 invested. Compare that to actively managed funds that charge 1% or more, and you can see why index funds are the way to go. To buy it, search for the ticker symbol VOO in your brokerage app. You'll see the current price and details like the expense ratio and what it holds. Click Trade or Buy, enter the dollar amount you want to invest, let's say $100, and choose a market order, which buys it at the current price. Then hit Submit. That's it. You now own a diversified portfolio of 500 companies. I remember the first time I did this I was nervous, but once you see that confirmation screen, you realize how simple it actually is. The secret to investing success isn't picking the right stock, it's consistency. I automate everything so I never have to remember to invest. In your brokerage app, look for automatic investments or recurring transfers. Set it up to pull $100 from your bank account on the same day every month, and automatically buy VOO or whatever fund you chose. This is called paying yourself first, and it's how you build wealth without even thinking about it. What I love about automation is it removes emotions from the equation. You're not watching the news and deciding whether to invest this month. You're not second-guessing yourself. The money moves, the shares get purchased, and you keep living your life. I've been doing this for years, and it's the single best financial decision I ever made. Set it and forget it. Real quick, before you scale up your investing, you need an emergency fund. I recommend having 3 to 6 months of living expenses saved in a high-yield savings account before you start putting serious money into the market. Why? Because if an emergency happens and the market is down 20%, you don't want to be forced to sell your investments at a loss just to pay rent. Your emergency fund is your financial airbag. Once you have that safety net, you can invest more aggressively knowing you're covered. I made the mistake early on of investing everything and then scrambling when my car broke down. Learn from my mistake. Build the foundation first, then build the wealth on top of it. This isn't sexy advice, but it's the advice that actually works. Let me tell you something that will save you thousands of dollars. The market will go down. Sometimes it'll drop 10%, 20%, even 30%. And when that happens, your brain is going to scream at you to sell everything. Do not listen. The worst thing you can do is panic sell. I've seen people sell during the 2020 crash, lock in their losses, and then watch the market roar back to all-time highs without them. Volatility is normal. It's the price of admission for long-term gains. What I do is set rules ahead of time. I write down, if the market drops, I will keep my automatic investments running and I will not sell. When you make the decision during calm times, you won't make emotional mistakes during chaos. History shows us that every major market crash has been followed by a recovery. The S&P 500 has never failed to reach a new high eventually. Your job is to stay in the game long enough to see it. Fees are silent wealth killers. A 1% management fee might not sound like much, but over 30 years, it can cost you hundreds of thousands of dollars in lost growth. That's why I stick with low-cost index funds like VOO with expense ratios under 0.1%. I also avoid trading too often because every time you sell, you might trigger capital gains taxes. The best strategy is to buy, hold, and let compounding do the heavy lifting. You might be wondering if you should diversify beyond VOO. The answer is yes, but keep it simple. A classic 3-fund portfolio includes a U.S. total stock market fund, an international total stock market fund, and a bond index fund. For example, you could do 60% VTI, total US market, 30% VXUS, international, and 10% BND, bonds. This gives you global diversification and a little stability from bonds. Rebalance once a year by checking your percentages and adjusting your contributions to bring things back in line. That's it. You don't need 20 different funds or individual stocks. Simple works. So here's exactly what you're going to do. Step 1. Open a brokerage account with Fidelity Schwab or Vanguard today. Step 2. Fund it with $100 and buy VOO or start a 3-fund portfolio. Step 3. Set up automatic monthly contributions so you invest consistently. Step 4. Write down your rule to never panic sell and stick to it no matter what the market does. That's the entire system. If this video helped you, do me a favor and hit that subscribe button so you don't miss the next one. Drop a comment below and let me know which broker you're going with or if you have any questions. I read every single one. And remember, the best time to start investing was yesterday. The second best time is right now. Let's build wealth together.